Hello everyone and welcome to this video. So today, no trades. I do want to talk about something that I've been thinking about for a while. And that is, I'm currently showing you the S&P or the ES index, and something looks very obvious here, right? We are, in a perfect uptrend. But I think this is a trap, and I'll explain why. So there is a video that I made. I believe it's in the weekly playlist, and it's one of those videos. And I went a little bit off script, and I started to talk about my high level overall sort of thinking or observations. If you've seen my videos, I do them daily, and typically I am referencing an operational framework that I use called the two-step model. I used to call it the fib model, but it's an everyday, you know, model for trading. It doesn't take into account any bias, but it does take into account trend alignment. That means I don't really worry about the higher time frames. And by higher time frames, I mean the daily, the weekly, the monthly, right? I am aware of them. I just don't really care about them. However, in this video, I want to talk about something a little different. Yes, I did hint at this, um, but let's dive in. So there are two observations, just two of them that I made. The first one I've talked about in the video, in the weekly video, uh, the weekly review. That's what I think that's what I called it. Now that video it's a bit complicated in terms of the first observation, and this one we'll talk about the second observation. So first things first. Very clearly, this is a weekly chart. We are in an uptrend. And if you can't tell, just looking at price alone, so you know I don't really use indicators, but let's use an indicator. Let us switch on an EMA. So this is 21. You can see very clearly we are in an uptrend, right? So, you're going to hear everywhere uptrend, just buy, don't short the market, blah blah blah, which is all great and good. Now I'm going to take this off. So that's the first observation you've noticed is that the market is in an uptrend. In the first video, not the first one actually, the first weekly I think it was, I highlighted this candle right here. Just going to put it in green. Okay, this candle right here. And I said this candle is making me very nervous. The reason it's making me very nervous is because this candle is called the end of a rising market. Now, it's a specific term used by VSA. Now, VSA is volume spread analysis. You don't need to know anything about VSA. You don't need to sort of overthink this. Just think of it as, I don't know, for example, if I said fair value gaps, you're more likely to think about fair value gaps in reference to ICT, for example, right? Just saying fair value gaps doesn't really mean anything. So it's the same thing. So in VSA, that's called the end of a rising market. I'm not going to go too deep into that because I mentioned that in the other video. And it's hard to explain without actually showing the VSA tool. And I really don't want to confuse anyone. However, like I said, the second observation is based on the trend. So we are going up, but what I'm going to do is just take the wicks away. Let's take the wicks away. All right. And this should hopefully make it clearer. I want you to notice something here from here. All right. we are going, making higher highs, we're making higher lows, right? We're making higher highs, make that a little smaller. So these are just observations. We're making higher highs, okay, and we're making higher lows. What I see here, my observation, I could be completely wrong. So this is in isolation. This is completely independent from this candle right here, which is the end of my rising market. So just bear that in mind. So two very independent observations. We're currently being squeezed on both ends. So if you are a buyer buying the market, you're not really getting that, much gains, right? Because we're making higher highs, but net gains is virtually nothing, right? So you're being squeezed. Okay, you're really watching those stop losses. If you're trying to short the market, well, we're not really going down. We're making higher lows, but again, it's not that great in terms of net gains, right? We're still quite tightly packed and closed in. When we are tightly packed and closed in, that is telling me one thing only. This is a smart money trap. When the smart money is trying to get rid of stuff or buy stuff or whatever it is that they do, they compact the market really tightly, which is, think of this entire range as a long version of just this one candle. So this one candle is called the end of a rising market. What that one candle is doing is exactly what I'm trying to explain, but it's doing it in just one candle. This entire price action is over weeks. So over several weeks, let's see, 2, 4, 6, 8, 10, 12, 14, 18. Over 20 weeks, we've virtually gone nowhere. 20 weeks between this low and this high. We've virtually gone nowhere, right, in terms of points. So again, my observation, just based on my observation, there are two things overall that make me bearish. Again, I could be wrong. For me to move away to a neutral stance, I need price to move away from this level. Okay, so from this level, I'm going to put the weeks back on. Okay, I'm just going to put that there because that's where the weeks is. Okay, so I need price to significantly move away from that level to give me a resolution. The fact that it's effectively swinging, ranging, tugging at that single candle back and forth is why in my weekly review I was saying overall I am actually bearish based on these two observations. The first is that specific candle. It's a weekly candle called end of a rising market. Again, that's a VSA specific term. And just price. What price has been doing. So no indicators, no anything, just watching price, watching trend, and seeing how compact we are. That is a smart money trap. So we'll see where this ends up, where this goes. Now, does that mean that I am on a day-to-day basis just shorting? No. Does that mean I'm buying? No. Because if you've watched my videos, you'll know that I just follow my model. My model has 3 steps. It's called the two-step model. The irony of the name has just dawned on me actually. It's called a two-step model, but it actually has 3 steps. And it's just based on the information that I'm looking at each day. Okay, so each session, each micro session, the model says, okay, this is the first thing you do, and then I just follow through. So I have lots of videos about the model. Um, I have videos every day going through the New York Open. Sometimes I'll do London, Asia, but mainly the New York Open AM session that goes through specifically the steps in the model. I have a few models. Okay, just historically, I've got a few models, but a lot of my videos, 99.9% of them, are just based on the operational models. That's the one I can use, go into the market every day, apply it, get out. All right, that's my operational model. But that's it for this video, and just trying to show that this ES setup, especially on the weekly, to me looks simply like a smart money trap.